So the AFIRE Berlin Conference, I think, has been an outstanding time for European, Asian, and American investors to get together and assess where are we right now.
I'd say a benefit of being here in Berlin is we got a lot of perspective of how the Europeans are actually feeling about the US. And as an American, it's helpful to hear.
To a great extent, we've entered an era of maximum distraction.
There's a lot of angst around uncertainty and lack of kind of credibility and trust.
It's making it hard, especially for institutions in Europe, to be able to assess how do we invest in the US if we don't know where the trade wars are going, or what the tariffs are going to be, or what are the final implications in terms of tax.
Tactics aside and sentiment and feelings aside, the US is actually doing exceptionally well, all considered. Right? The economy is strong and the property markets are strong.
It's difficult to replace a market as big as the United States on a dime, nor do people want to, because I think they see a lot of opportunities within the United States that they'd like to be able to access.
And part of that is the size and the liquidity in the market, but part of that is because it is predictable. It's relatively stable. From a currency perspective, from an inflation perspective, it's easier for investors to understand.
The concern right now is what happens in Washington.
So I think as an investor, what I try to process today and think about is how do I, kind of absorb and appreciate the angst and the uncertainty, but also focus on the opportunity. And I think if we talk about what came through today in terms of as a real estate investor, there's a lot of sentiment that we want to be allocated to sectors and strategies more than markets. And a lot of those sectors and strategies are, for example, in housing. So senior housing, student housing, build to rent housing. And you think about how do I actually invest in that? And the reality is the US is the largest market. It's the most liquid market.
However, there is this sense that given that, there's a lot of uncertainty still about US real estate, a lot of investors are at the very least, pausing and trying to figure out where things are going before they invest. I do think that Europe is looking pretty good right now. They see more stability there. They do see some opportunity. I think Asia is attractive in some countries, and I think people really want to continue to invest in Asia. Japan comes to the top of a lot of people's lists.
There's an adage that you hear in our industry, which is that investors tend to favor their domestic market or their home market first. And then the US has been really the second market for a lot of investors. And I think that, what's so challenging today is that I think people are reconsidering, is the US really my second market? And where do I go if not the US? So I think the first place people will go is back to their home turf. We heard a lot of that, and particularly given the backdrop here, there's a lot of focus on investing into infrastructure and physical assets in here we are in Germany, certainly in Germany, but in Europe. And then interestingly, I think one of the themes that came through is if you still want exposure to North America, there was an argument made for Canada. It has a lot of the same fundamentals as the US. It's obviously a much smaller market. It's harder to invest in scale, but perhaps for a few years and during this period of time with heightened uncertainty in the US, it could be a time where investors give a lot more consideration to markets like Canada or even Australia.
So really, we're now at a time, halfway point of 2025. A lot of questions still to be answered, a lot of debate, which you're hearing behind me right now, as people are working out what's going to be happening next. We're going to be meeting again at AFIRE in New York City, September 9th and 10th. Very much looking forward to seeing if we have more answers and more clear direction about where things are going.